Hello there, John McLaughlin here again. Welcome to another trading session. We're going to be trading gold using the Crossfire strategy on the 5-minute time frame. It's the 22nd of July and we're going to be trading 1 p.m. till 3 p.m, which is the open of the US market. It's a Friday. I always like trading Friday because we've got high volatility and there's a potential of lots of high impact news. So we should be on for a good trading day today. See how things go. Just one other thing I would like to say is that if you're getting some benefit from these videos, and I trade the Crossfire strategy on Forex pairs and on gold as well. So if you're going to get some benefit from this, then please consider subscribing to the channel. And if you've got any questions, then drop it down in the comments section below. Just ask any questions that you want and I'll answer them as well. One of the things that I'm going to be starting as well, I've been considering doing this, is rather than recording the session and uploading it, to give you some more value, is I'm going to record it and stream it live. So if that's something that you want to be part of, if you want to be part of the live sessions, so you can watch me trade and go through it, then let me know in the comments if that's something that you're going to want, and I can give you access to that as well. Anyway, here's the session. It's the gold trading session on the 5-minute time frame. Let's get started. Alright, good afternoon everybody, John McLaughlin here, hope you're all well. It's a Friday afternoon. We're going to be trading gold on the Crossfire strategy, Crossfire Gold as I like to call it, and it's 1 o'clock, it's 1300 GMT. So first thing I like to do when I get on the charts is just have a look and see what gold has done. So what you can see right now in front of you is gold on the 15-minute in this one. And here we've got gold on the 5-minute. So we put the indicators on, we put the trend lines on the 15-minute, and then we take our trade decisions on the 5-minute. So gold over the last few hours, certainly yesterday, has been quite on quite a roller coaster of a ride. Big pushes to the downside, kind of sideways, big push down and a big push up. This was yesterday. This move alone from here, about 300 pips from there down to there. Yes, we'll call it 300. Okay, and then the move back up from this low. I mean, this is like 1678 an ounce. It's the lowest it's been for a long time, and it's actually gone back up to here, 493 pip push in that direction, and that was since yesterday, 21st. Since yesterday at 1300. Would you believe 1300? There's a coincidence. So yeah, gold's been on a real trip the last 24 hours. And today, with it being Friday, I like trading Friday because we get lots of nice volatility. Probably saying that, look at the yesterday for volatility. And the way the charts look right now, what I like to do is just take a bit of a step back and say, okay, what has happened? What are the charts telling me right now? So the first thing that strikes me is you've got certainly on the 5-minute, because we're going to be taking our trade decisions on the 5-minute chart, is we've got the moving averages below the price. We've also got the stochastic, both stochastics in the extreme of the overbought. Okay, so the possibility is that price wants to come down for a sell. Okay, we've got news here at 1450 and news also at 1815. So the 1450 news, let's go and look at that. We'll look at both today. We'll look at the my FX book on that one. Okay, so we've got Canadian news. Okay, and again, Canadian does make up the price index of US dollar. So have a look at the Canadian news. That's coming up in 26 minutes at 13:30 GMT, and also at 14:45 we've got news coming up for the US dollar. Again, high impact news, medium impact, low impact. That's definitely going to have an impact on the way we trade today. And all news means is that it's a good opportunity for the banks, for the financial institutions, for the big pension funds to go and manipulate the market. All right, so again, my Forex Factory as well. It's always good to check two different sets of news from there. 1:30 now, showing us Canadian, and obviously US at 2:45. Okay, so no real change there. Right, so what we'll do is we'll get the boxes on. These areas here are areas that I looked at. I put these lines on from last Friday, and they were the higher highs at the time. So we're looking at this area here, and it was a higher high there. But you can just see from looking at that how price has respected this zone all the way along. Okay, pushing back down up to that zone, up to that area there. So you can see how important putting these either higher highs or lower lows, the moving averages, and also areas of imbalance. And I've looked at this previously before I came on, and I couldn't see any imbalance in this area or this area here. Obviously that's been taken out now because of this move. But yeah, I thought there might be some areas of imbalance that we could look at, but there isn't any. So that's interesting. So let's go and put the boxes on. So the box essentially just highlights the time that we're going to be trading, and that's between 1300 and 1500 GMT. So we'll put the box on there, and 1500. What I'll do is just get rid of the extension lines. And one important thing to do as well is when you do put your box on, depending on whether you've got a white background on your trading view or a black background like I've got, just make sure you can see the whole wick. Okay, so sometimes when you put these on, you'll end up with, if you look at the style, so the background, sometimes with a border, okay, you can put a border on, and it's like that sort of colour, and increase the opacity, and then now you can't see the wick. Okay, so get rid of the opacity completely. All right, so you don't have that, and make this shade, the background, just enough so you can see it, but not too much so it doesn't blank out that area. Okay, so just somewhere around there is fine. That's 23% on mine. I've got the green. That'll do me. All right, so next thing we want to put the trend lines on. So all we're going to do is put them on the chart for now, and then at 13.15 we'll go and put those trend lines in position. Okay, we're putting all the indicators, the trend lines. There's only two trend lines to put on, but make sure you put it on the 15-minute. I'm going to change this one to red, just so we can see the difference. And if you remember, what we need to do is we need to identify the higher high next to this candle here. So right now the wick of this candle is there, so the higher high is the green candle next to it on top of that wick right now. Okay, it might change because we've got a few minutes yet before 13.15, and the opposite to that is the lower low. Okay, so the wick for here is this one. Okay, so the next candle is here, so we'd put the trend line at the bottom of this wick. All right, in fact, I'll tell you what I'll do, I'm going to put that on now, just onto there. Well, I did that, put the magnet tool on, and it just snaps to the different areas, and it makes it easier and potentially more accurate. Well, not potentially, but it does make it more accurate. And then we'll put that on there. Okay, so if I take the magnet tool off, what we've got now is the trend lines that we can just pivot on there. And what we're looking at doing is when this candle finishes painting and we move to the next candle at 13.15, we're going to put this red trend line on the bottom of that wick and the green trend line on the top of that wick. Okay, wherever it is. If the price pushes up to here, we'd have to find a new higher high. Okay, and based on the price action of the last day or so, I would say it probably wouldn't be difficult to find, but we don't want to go past the new session. So if it went further up, then we just put a horizontal line on there. All right, but for now, that's where we're going. So the indicators that I've got on the chart. Okay, and it's important when you're doing trading, keep things as simple as possible. All right, don't confuse yourself with too many flashing things and indicators and things that can just slip you up. So the two trend lines, we've got those on. We've got the PSAR, the parabolic SAR, and we've got the moving averages. So I've got the 5, okay, this yellow one here. We've got the 13, which is this. The 13 actually comes with the indicator. The main indicator that I use for everything, for every different strategy that I use, is called an indicator. And so that incorporates this 13 moving average, and what it does, it changes color with the trend. So right now it's green because it's telling me that potentially there's a buy trade, but when there's a sell trade, then as you can see, just sneaking behind there, it just changed color. Next one is the red, okay, which is the 50 moving average. Then I've got the 200 moving average here, which is the blue, and then a little bit further down, wherever he is, let me just make that smaller. Oh, he's here, sorry, can't see it. So this one that's flatlining here, this is the 800 moving average. All right, so the 5, 13, we've got the 50, the 200, and the 800 here. Now that's on the 15 minute, and you can see how this is different on the 5 minute. On the 5 minute, what it's doing, it's showing me that every line, okay, let me just start again. Look, every line is a potential take profit level, and wherever there's a line on the chart, the price will either bounce or break. Okay, so if you go back to this line here that I mentioned earlier, that I put on last Friday, okay, and because this is an area of support and resistance, and to be honest, one of the easiest ways to trade is very similar to this, just by looking at price action and incorporating support and resistance. We can see from talking about bouncing or breaking, price came up to there, okay, bounced off, came back, okay, price came up, bounced off. In fact, that's not really big enough. Let's see, make it a bit bigger. Okay, bounced, and then it went to this zone, and it bounced, and it went back, and it bounced, then it broke up, and it kind of hovered around here, didn't really know what to do. And then, see, when it breaks out of an area like that, and it's kind of spending more time out of the area than in the area, that's when you know it wants to go. Okay, that's what I'm saying. The price wants to go, and that's what it did. It went up all the way to there, and then it came back down to the same area. Okay, now we can put different zones on here based on support and resistance, but what I'm saying is every line, okay, every line is a potential area, or is an area where price will want to bounce or break. It'll bounce off and go back, or it'll break through and continue down. And you'll see, as if you watch me online, if you watch the YouTube videos, you'll see the same pattern emerging. Okay, we've got a moving average, the price is going to bounce or break. Okay, it's bounced off, stay out of the trade. You know, and this continues. This continues the same pattern all the time, same pattern, same repetition. How do you get good at trading? You do lots of back testing, take lots of trades. The only way you get better and improve is by practice and repetition, and you can practice on demo. Whether you like demo or not, you practice on demo and you get better on demo. And when you move over to a live account, that's when you start looking at your own psychology. Okay, so it's all a big learning curve with trading, but you do little bits at a time. Okay, one of the things I want to do as well, which I generally do just for my own, just because it's something I've done, is I put a vertical line where the news is. Okay, there's a vertical line here. So even though this news is at 14.45, there may well be some opportunities to trade before then, depending on the price action. And this is the thing, you can always tell what's happening in the markets based on price action. What I mean is, how violently does that, I don't know if that's the right word, but how quickly does that candle move? Is it just going to go along and start walking the dog and it's having a nice little time? Okay, or is it going to go bang, shoot up, bang, shoot down, bang, shoot up? okay, which can happen sometimes with gold. And that will give me an idea when we get started. Okay, we've got just another few seconds left before we put these trend lines on. That'll give me an indication of what's going to happen and what we do with our trading. And the thing is with trading, a lot of people out there learning trading, and you'll see somebody say, look, all you need to do is put 2 lines on the chart, and you know, if the price goes above the green line, you're going for a buy, and when the price goes down below the red, that's when we're getting for a sell. And it's not entirely accurate. What you've got to really understand is that traders aren't just looking at one thing, they're looking at everything. Okay, you're making a decision based on everything. Okay, and if you watch these sessions, you'll know that I talk about the trend lines. Okay, I talk about the PSAR, I talk about the moving averages, I talk about the stochastic. All right, let's get these on now. So it's 13.15. So what I'm saying is look at everything. Okay, so just on top of that wick, that's the lower low, and just on the bottom of that wick, and that's where we need to be. Let me just extend that a little bit further, that's it. Right, so now what we do is we go over to our 5-minute time frame, and we take our trade ideas from here. Or trade decisions. Next thing I need to do is open my MT4, which I should have had done previously. So you can see straight away what we've got. We've got a ninja down straight away. The PSAR has already flipped, and it may want to go down. See, we've got this 13 moving average, and it's already hit that. Okay, so if we want to take a trade, what I want to do, I want this. Let me see even bigger. Hope we can see that. So if I want to take this trade, what I want is I want a ninja down. Okay, check, we've got a ninja down. The PSAR has flipped. Okay, check, we've got a PSAR flip, and there's quite a bit of distance as well between the body and the PSAR. That's okay. Okay, the stochastic is in the extreme of being it was in the extreme of being overbought here. Okay, it's come down for a sell here, but conditions weren't met. Now conditions are being met, but with this candle right now is indecision, where you get a long wick and a small body. We call it a doji candle, and it's just telling me the market doesn't really know what it wants to do, but it's here. Okay, so is it going to bounce or break at this 13 moving average? Well, we don't know because it hasn't happened yet. If it does break, then we end up with some clear air. Then the next potential target is the 50 moving average, and the distance from here to here is 30 pips. So potentially we could be on for a nice sell. But the thing is with gold, we don't rush in. We don't rush in with anything. The important thing to practice is patience, because the mindset that you want to adopt is, rather than thinking you miss it out, like get in for the sell, John, you should be in for the sell, look, you're below the trend line, is see this as the banks dangling a carrot in front of you, going, yes, we're going to take you out your stop losses. Okay, and remember that sometimes before news, the banks need to consolidate positions, and they need to liquidate positions so they can then take the liquidity and then put in their own orders for their own clients and customers. Okay, so, and then the other thing as well is that there is still a wick over this trend line. Okay, as I say, it's dragging its feet. Okay, what I want to see is clear air, and ideally clear air below the green trend line. You never want to be in a position where you're in this zone here, okay, because there's too much support and resistance before the crossover. After the crossover, it's not so bad, okay, but ideally for the sell, I'd want to be in this position going down below the green trend line. So let's just see how it plays out. And as I always say, you want to get yourself in a position both psychologically and physically where you are in control. All right, you've got your MT4 open, that's there. You've got you ready to take a trade. Okay, you're in a position where you can see everything. Now this is why I don't trade on my phone. Some people love trading on the phone, that's great. Okay, if you feel in control and comfortable taking a trade on your phone, then do that. But I would say trading gold on a Friday on the 5 minute time frame, you're going to need some pretty rapid fingers if you're going to trade gold. But if you can do it and you're comfortable, then do it. If you're not comfortable, then common sense, don't do it. All right, so this is looking interesting. All right, we'll get in this. Okay, so we're in the trade. Looking at, should come down to there. Where would the stop loss be? I would say, looking at these higher highs, your stop loss wants to be about here. Okay. So one of the things I always say is, when you get a new candle forming, bearing in mind we're only 3 minutes, we've got 3 minutes left on this time frame. Just give it a little bit of time to let it do its thing. Okay, and I would probably admit I maybe got in a little bit early there, but because of the way the price is right now, and because we've got this moving average down here, we've got a good opportunity to take our profits here. Like it's 22 pips down to that level there. Okay, but never be in a rush to get in. But by the same token, you want to be taking, the opportunities when it presents itself. The other thing about the moving average, if you look at the 5 moving average, if I can see it on there. So the 5 moving average here has crossed over the 13, so it's pointing down. So everything on this trade is telling me that it's a good trade, and it's it's got a high possibility that it's going to go down to this moving average. As I always say, it's gold, it's Friday, we've got high impact news coming in. And what I'll be tempted to do is let this one ride down to the moving average, and then see where we go from there. So the thing to look at is, where have we got previous areas of support and resistance? It's kind of miles away really. And we've got a low there. Got an area here, so there's an area. Okay, there's a high, there's a previous low, so let's just see how this goes. So sweet spot, remember, 10 pips. Currently 6 pips up. Well, that could literally, gold could do anything, but just wait till it gets to 10 pips. So the other thing to consider is that if this keeps going in the right way, then the next take profit level is down here with this moving average. Okay, so what I would suggest is, if you're using the exit manager, is get out at this level. Okay, take out some percentage of profits and then continue all the way down to the downside for a risk-free trade. The other thing to note as well, if you look at the 15-minute time frame, you'll see that the PSAR hasn't yet flipped. So when the price goes down to there, and we're assuming it's going to, the PSAR is going to flip and then may take us down for further profits. But we're close to our take profit level at the moment. it's one of those trades, it's one of those times where price wants to go down, but has got a certain amount of resistance from that moving average. Well, we're 10, 11 pips up now, 12 pips. So really I should take profits now, but I'm looking at this thinking it may want to go further. Okay, we'll do a 10 pips. Okay, we've done a 10 pips. We can always get back in. I think when this goes down and this PSAR flips, I know we're looking at the 15-minute time frame. However, from there down to that moving average is 35 pips. So 35 pips from here is, well, got another 60 pips down to there. So I think there's another opportunity to get in for a sell. Still toying with that. So that piece hasn't quite flipped yet on the 15. It will. There it goes. There it goes. So what we really want before we get in again, is it going to bounce or break next to this moving average? Then we'll know when we get the ninja down on the 15-minute time frame, and we'll know looking at price action from here, because price will start to come further down. So there's 15 seconds on this time frame. So is price going to be clear of this moving average? No, it isn't. Look, maybe it is. 4 seconds left. Is it gonna push for the last bit? No. So it's bouncing off that moving average. So were we right to take 10 pips? We were in this case. For safety, we've taken our profits for the day. Now we've got the ninja down on the 15, but it's still bouncing on that area. Okay, so again, in the same situation as looking at these trend lines, what I want to do, just treat this line, even though it's a moving average, in the same way I treat this line. I want the price to come down. I want there to be clear air. Okay, so clear air, not dragging its feet, clear air, and then I pushed to the downside. So for a Friday on gold, this is quite steady. This is quite steady. And what we'll probably find as we get closer to the news, the price, it may go down, okay, but generally towards the news it'll just rotate sideways with consolidation. Okay, it'll consolidate. And remember, one thing is that even though you see ninja downs and ninja ups, they can change at any time. Okay, for that piece out to flip underneath, the price is going to go all the way up, but you know that ninja down can disappear fairly quickly. So that's something just to bear in mind. So you might have looked at my reaction when it went to 10 pips and it went to 11 pips, and it was like, shall I stay in? And that little bit of, not doubt, but that little bit of greed sneaks in, and you think, oh, I can maybe be clever, take more than 10 pips. So if I'd have done that right now, I'd have probably been looking at maybe taking 1 pip or 2 pips in profit rather than profits for the day. So it's always good to stick with the strategy and don't try to outwit it, unless there's something blindingly obvious, you know, unless price is doing something. But see, right now we're out the trade, we've taken the profits, and the emotions are just like that. calm emotions, that's what you want. Okay, you don't want to be celebrating your wins, you don't want to be deliberating and worrying and stressing about your losses. You just want to be neutral. You can see right now the stochastic on the 5 minute is coming down. So it's come down on here. We took advantage of that move. And remember that the stochastic is a lagging indicator. So it's not a crystal ball. It doesn't tell us what's going to happen, it just tells us what's happened or what's happening currently. And the red line on top means sellers were in control, and the blue line is the buyers. Okay, and you can see what's happening is it came down quite sharply about here, which represents this move, and it came down, and what will then happen as the buyers lose the volume, as the buyers lose control and the sellers take over, you'll see these lines coming together, and then what they might do is they might end up crossing over and then going in the opposite direction if the buyers then take over. But I don't see it. I don't see the buyers taking over. I see price eventually coming down below the 50 moving average, below the red trend line, and I see a bit of consolidation before the news, and then a big push to the downside. And that push to the downside could even take us down to the 800 moving average, which is a big old move, but that's what gold has been doing the last 24 hours, 24.48. So from where the price is right now, that takes us down 154 pips, 150 pips. And it might not do that. It might go in the opposite direction. It might shoot north. But again, we look at the markets. We do our analysis. We can predict all we like, but the market will just do what it wants to do. It takes no prisoners, and we've just got to be smart enough to understand and read the markets and react accordingly. This is why we put stop losses in place. And talking about stop losses, having a conversation earlier about stop losses and risk to reward, and I've got to be quite honest with you, within some circles it is quite a contentious and even in some cases a pretentious subject. Some people think your risk to reward should be a certain percentage or ratio. Some people think you should take more than 10 pips, and so on and so on, and so the debate goes on. What you've really got to just stop and look at is, can you do the strategy, and how many trades do you win, and what is the risk management like? And what I find with this strategy is going to the previous highs is a good stop loss, and the take profit, as I say, sweet spot is 10 pips, and then if the price action is such and the moving averages and that sort of thing are in the right position, then go and take more. Okay, you can, but what I always say sometimes is that because I'm in this position where I'm in my office, I'm in control, I've got my finger on the button of buy and sell, I don't often set a stop loss. I am my own stop loss, because sometimes with gold it's too quick. And I found myself in the past, literally, here's my mouse, alright, clicking the buy and then opening the new order and then got my finger on the close position. Okay. Sometimes if I'm leaving it, I never leave the charts. But if you do leave the charts, put a stop loss on, because if you're not in control of it, then you're going to end up blowing your account. So if you're in a position where you're distracted, and I've got my dog down here, he's fine, he's in bed, he's quite happy, he's having a little kip at the minute, but he knows that he doesn't disturb me when I'm on the computer. If you've got kids that want attention and you're not fully concentrating on what you're doing, put your stop losses in before you even place that order. Okay. Remember, the focus of attention when you're trading wants to be on managing your account. It doesn't want to be focusing on what money can I make today. And as soon as you focus on account management, then you become a much better trader. It's a bit like being in business. You focus on your customers 100%. Focus on your clients. Focus on those new leads that came in and what they want and how you can serve them best. So protect your account at all costs. That's number one. In terms of, stop loss, never risk more than 1%. Back in the day, it used to be 3%, and then we realised actually, 3% is a little bit too much. You can blow your account quite quick with that. So 1% of your account. And as you can see, what's happening now, particularly on the 5 minute, is we're starting to go into that consolidation. It's respecting that moving average. I mean, everything really is kind of lining up for another move to the downside, but I would suspect with that news, the news is quite a way away though. It's 14:45, so it's like an hour and 5 minutes away. But just remember, it's not retail traders who are moving the markets, it's the banks. It takes an average of $10 million to move 1 pip in any direction. So you can see with this move here, which was just from there a total of, or down to that wick, 30 pips. Okay, so we're looking at what, $3 billion in that little move there. Even your lucky Euro Millions lottery winner, okay, still ain't going to impact the markets to much of a degree. And if they're chucking $10 million in at a time, then good luck in the unemployment queue. So yeah, a little bit of indecision on the 5 minute. The 15 minute hasn't really done a great deal either. Small candle, and again that's indecision. Looks like an old-fashioned spinning top. Call it a doji candle with a big wick and a small body. And again, what do we do? Okay, I'll tell you what you do in this position. Nothing. Okay, that's what you do. You get yourself comfortable. Okay, I put my hands on my head all the time because my shoulders ache in this chair sometimes. So we just sit on our hands, or put them on your head, and wait and see what's going to happen. And I think, well, I know what's potentially going to happen. Okay, I said before it's going to consolidate to some degree before it gets to the news, and then I'm thinking it's going to push to the downside and maybe entertain these two moving averages below the 200 and the 800. But sit, wait, be patient. See what happens. So let me just let's have a look at this a minute. So if we put a trend line on here, okay. So let's change the colour. Let's put him. Let's make him a nice orange colour. Does that stick out? Yeah, that stands out. All right. So this is the trend. The price currently is respecting this moving average, which is also a level of support and resistance. Okay, so it's a resistance area for this here. We've got this trend line coming down here. So what we've got in effect is a falling wedge, and price is going to get forced to do something in this level here. Okay, and I'm going to leave this orange one on just to see if it's accurate. If price pushes through and past, then this is going to be an opportunity for a sell. Okay, if price continues to consolidate, okay, it's going to do something at this point. Okay, maybe it will consolidate down. Okay, I can't see it going past this point. Maybe a push to the downside. I don't really see a push to the upside. However, I could be wrong. That's why I'm not jumping in to do anything. If I was 100% sure that it was going to drop down to the downside and take out these or match this 800 moving average, I'd be in the trade now. I'd have stayed in the trade, but I haven't. I've cashed out with 10 pips and profit for the day for that. So I'm going to leave this one on here and see what happens. See, look, price wants to go. It's trying to get through that trend line. It wants to go down. It's coming back. It's retracing. It's bouncing off it, and it'll keep doing that until I think eventually it's going to break through. So one of the things you might be asking is, okay, you're looking at potentially it's going to go down for a sell, but look at the stochastic. It's already in the extreme, and this is one of the things about the stochastic is that it can stay in the extreme for a long time. It can snake. Literally, I've seen it like snake all the way along in the extreme of the oversold or overbought for many hours, and you think it's going to go up. Snakes along here. It's going to go up for a buy, and then it just continues. Okay, and you just get a feel for these things. So let me just tell you, while this is happening, a little bit about consolidation and what is happening right now. The market is going sideways, and I'm talking about the trade going for a sell, potentially, and other people might be doing other strategies, talking about the potential of going for a buy. So we've got to be careful that we don't get a fake move, okay, and this is pure manipulation by the banks. So if I put a box, say I put a box around here, okay, and this area is consolidation, okay, so if it goes to there, to there, to there, to there, to there, nothing's really happening. And what can happen sometimes is the price, let me just get my brush tool, the price, right, so the price could go up, okay, and then it could go like this. Okay, we go, oh look, it's going for the sell, John was right, it's going for the sell, and then suddenly it turns on its heels and it pushes up like this, okay, and we're going, oh, it's all the buyers, people go, oh, I told you it was going to go for a buy, and then the price will then go to, eventually it'll go to the news, and then it will show its hand, okay, could do that, okay, could do that. So what we've got here are the banks manipulating the market to take people out of their stop losses. Remember, at these levels, we've got cash here, okay, and we've got cash here, okay, in terms of people's stop losses. So think about what I just did there. I was in for 10 pips, got out at 10 pips. Thank you very much, okay. That's me done, okay. But other people might well still be in this trade, okay, and their stop loss is up here, okay. The banks then push the market up, okay, takes this stop loss out, okay. They push the market down, okay, takes this stop loss out, and that's what they do in terms of liquidity. They're liquidating the market, taking people out of those stop losses, so then they have liquid assets for themselves to then go off and place their own orders, which is what when they do here, okay. So this is an accumulation phase for the banks and the financial institutions. Then they've got the funds to then go, oh, there's the news, so we'll hide behind news, and then we'll then push the market where we want it to go, okay. Thank you very much, goodbye retail traders, okay. And we want to avoid that, okay, we want to avoid that completely. So I'll keep these on. I'll keep these on because this might be it might well do something very similar. Okay, before the news happens. Remember, it's 13:53. Okay, we've been on almost an hour, and this is when most people just say, okay, I've done an hour, that's it. And I think the best of today's trading is yet to come. This taking 10 pips here, okay, it's nice and simple. Okay, it was fine. Okay, but there wasn't really a lot of learning to be had. I think when things get to about here, that's when things are gonna, excuse me, it's gonna liven up, and we'll find out more about price manipulation, about what happens at the news, and how we can take advantage as retail traders. Just one thing as well I want to mention is when you see price move in a direction and you don't know why it moved in a direction, go and find out why. Okay, if there were no moving averages here, I'll get an example later. But if there were no moving averages, and the price shoots down, okay, go and find out why. And sometimes with the Crossfire strategy, is if you look at previous highs, previous higher highs, previous lows, previous areas of support and resistance, quite often you'll understand why price went there, because they are good potential take profit targets. So if the moving averages are above and things aren't lining up quite as you want them to, and you look at the charts when you first come on and you go, oh, it looks a bit odd today, not really quite sure how the price might react, then put some areas of support and resistance on, and I'll probably go through that in a different session just to avoid any confusion. But it is simple, the thing is, keep things really simple. The Crossfire strategy works and people like it because it's simple. That's why I like it, because I'm simple. But it is, the simpler you make things, the more successful you become. And most things are simple, it's just people like to complicate it. And that's what you find online. If you're watching this video right now, wherever it is, whether it's on Facebook or YouTube, whatever, I'll probably guarantee this isn't the first video you've seen, but I can guarantee you will see an advert saying, are you using the stochastic? You don't want to be using the stochastic. Oh, why? And a lot of the information that is available right now is purely manipulating you to buying stuff. Okay, people want you to buy stuff, and there are a lot of people out there who know what they're doing, but a lot of people do contradict themselves, and one of their marketing things is looking at retail traders, and just saying, you don't want to be doing that as a retail trader. You want to trade like a banker, all right? And then in the next video, telling you why you should be a retail trader. So you've got to be careful with the information that you get. And the key really to learning anything about trading is just pick one strategy. Pick a group of people to learn from, or one person to learn from, and just put the blinkers on. Because remember, you're not going to be losing out by doing that. You're going to be gaining and benefiting by being focused in your approach and focused in your education, rather than going for this kind of shotgun effect where you're jumping from one strategy to the next, because it does you no favours. The ultimate goal is to become a profitable trader and to be consistent and to be confident in what you're doing. And these videos and these different people that market themselves, that all they serve to do is unstabilize that confidence that you grow and develop, and make you look at something else. And it's usually, you go, look at my stuff and buy that, please. So just be mindful of that. Just be mindful of where you're at right now, where you want to be, how long have you been trading, and how much progress have you made on that journey. And that'll tell you if you're on the right path or not. How long it takes you to trade, how long it takes you to become profitable is an undefinable answer, because everybody learns at their own pace. I know some people who've started trading in 3 months' time, they're experts, and you think, oh, it's just how do you do it? People like me who just goes to a session, learns, goes to another session, learns some more, and then just goes, I'm not getting this. And suddenly, one day you'll wake up and you'll go, oh, actually, I understand that. And you look back and you realise you've been on the right path all along. It just took you longer. Anyway, markets right now, definitely in consolidation, nothing happening at all. You see, price now is approaching, on the 5 minute anyway, that green trend line, and that is acting as a resistance level. So now price has got a decision to make. Is it going to push through the green trend line, or is it going to push through the orange trend line? And sometimes that's when you can maybe, that's sometimes when it comes out of consolidation and maybe push to one side. So I say the bankers might go, okay, let's have a temporary push down to the downside, or have a temporary push to the upside, and take people out these stop losses. Okay, so that's where we're approaching right now. So if price shoots up and it hits that PSAR, in fact, if price shoots in any direction, what we're going to do? Okay, if price shoots down, what we're going to do? If price shoots up, what we're going to do right now? And the answer is nothing. Okay, because all they are is traps to take you out your stop loss right now, because we're approaching the news. I got in this trade here because it was quite a distance away from the news, and it was a nice little setup. That was okay. Here, these are just now traps to take you out your stop loss. So we're now going to wait until we're on 14:45. Yeah, 14:45. So we've got another 40 minutes to wait. So stochastic is in the extreme. The tail of the stochastic is starting to come up. So we've now got the blue line on top. That represents this move that you're seeing right now, with this move to the upside. So you've got that. Sorry. Okay. All right. I'll just stay off. So anyway, you can see the tail going up. That represents that move there. And the way I see it right now is the banks are just lining up, and I'm just saying, okay, you do what you want. You can do exactly what you want. I'm just going to sit and wait until that news comes in. So price could go up to, well, where this arrow is, the top of that. Price could go up to there. Previous low is there, so yeah, down to there. So pretty much, it could just follow the area of these arrows until it gets to here, and then wherever it's going to go from there. Yeah, well, we're still waiting. What I want to do as well is just take the measure tool, and if price is there when the news kicks in and we go to the downside, we've still got plenty in. What I'm going to do is mark off 10 pips from here. 10 pips from, in fact, let's make it a bit safer. We'll mark 10 pips off just slightly above it. 17.1975. So as long as price doesn't get below there, then this would be a potential good take profit level. In fact, let me just change that, because the spread on gold at the moment is an average of 2 pips. So we want another 2 pips from there. So you see how tight that is, okay? And one thing you've got to realise is when the news kicks in, that can shoot down or shoot in any direction in the matter of seconds. However, we've got this other moving average down here. But we won't know if that's any good until we get to here, and price will have a bounce or break. However, from there, crikey, there's 96 pips in that. And from this area here, we know just before the moving average, yeah, it should give us, as long as price doesn't get too far below. If we end up with a candle, what I'm trying to say is, if we end up with a candle where it starts here, or it starts here and it's dragging its feet around this trend line, I always want clear air. So if there's no clear air from here, then we'll wait until there is clear air. Okay. I know we've been waiting quite a while today, but that's what trading does sometimes. Sometimes you have to wait. If this news was at 13:30, like it often is, okay, then we'd have been in a position here waiting for a trade, and then in the trade, out the trade, all done, thanks very much, goodbye. But today we've got to wait. I mean, we've got 10 pips already, we've taken profits for the day, but I want to see what happens when we get to here. So I'm pretty sure price is going to go ballistic. And I want some of that ballistic in my bank. Thank you very much. Alright, so into the last 5 minutes of before the news comes in, and what we've got so far is we've got a ninja up. Okay, we've got the PSAR just here, and the PSAR is just there. Okay, on this candle. So we know if it's going to go for a sell, I want it to come below this green trend line. Okay, I want to get into a sell position about here, and then I can get 10 pips from there. Okay, bearing in mind there's broker spread, so that's all been accounted for. If it goes for a buy, then it doesn't necessarily matter. From back testing, we've tested this rigorously, and you can get in a trade before we get into this area here. So, but ideally, because of the 15-minute, and if you see where my crosshair is right now, so that there is where the PSAR is on the 15-minute. It's here. Okay, so that's when we're going to get the flip. So the 5-minute is the early warning, and the 15-minute is often where you can take trades when it's a little bit safer. However, it depends on what's going to happen when this news kicks in. Bearing in mind this is high impact news on a Friday, and we're trading gold, of course. I'm still confident that it's going to go down. It may well go up first, but it might come down to these moving averages. Okay, so that's what I'm looking at. However, one of the things about being a good trader is being able to react to the conditions. So if this price went across to there and shot up, where would your stop loss want to be? Well, just below these PSARs here. And if it went across and went down for the sell, if you're going to put the stop loss on, where do you want it to be? And I would say just above these higher highs here, or these highs here. It's about there. Okay, still a fair distance away, but remember it's a 5-minute time frame. So if you're slightly distracted, put one on. If you're not, be in control, have your finger ready to get in a trade and to exit a trade cleanly. So if it does go for the sell, it could happen quite quick, because the price would have to come back down and touch this PSAR for that to flip, for us to then get the ninja down alert, because we've had a ninja up, we then get a ninja down, and then I think it just depends on the price action. And you know that the bankers don't want retail traders to benefit, and they will move the price as quickly as possible. So this might happen in literally by the snap of the fingers. And if that does happen, it doesn't matter, because there are always opportunities to get in. The price will go ballistic in one direction or another, and then you'll find it kind of settles down. It's like a spinning coin. Okay, it goes crazy, then it kind of settles down, and it flattens off, and that's when you consider whether you're going to get in the trade or not. So what's happening right now is kind of, excuse me, oh, so exciting. What's happening right now is the pushing price in one direction to try and attract those retail traders, and these arrows on the chart are just illustrations of where price could potentially go just before this news kicks in, after this area of consolidation. And all it's doing is just taking people out their stop losses. So let's just get rid of a few things. Let's just get rid of that. That was the consolidation box that I put on. Right, we're into the last. Oh, we're there. Alright, price has gone up. So that's the initial ballistic level. Okay, it's taken out the PSAR on the 15-minute. We've got a ninja up on the 15-minute, but that ultimately will settle down. So it's just about to go over the trend line. No resistance on there. So we've still got 3 minutes and 50 left on this time frame, and I'm still just sitting back, letting the banks do their thing. Again, it's moving too quickly for us. And if this does go for a buy, then I'm only interested if, I know I did say you can get in at this level because of the backtesting that we've been doing. However, I do feel more confident waiting until it goes into clear air and goes up. If indeed it continues up, it might well end up coming back down. We don't know yet. Right, last 2 minutes of this time frame. And all you're looking at now is pure manipulation of the price by the bankers. The previous highs are there, and also there. Okay. So they're previous highs. So that move there, it started just here, went up to, it was 82 pips. It went up. But I'm just exercising a bit of caution because it is manipulation, and there's no real prediction to be made other than when the markets kind of calm down a little bit, once that coin has stopped spinning and settled down, and then we can have a look at what's going on. Now again, for us to enter this as a sell, we need price to come down to this piece. That needs to flip. We need to be below this area, and then we can consider this move here, which we looked at earlier, which I think is the safer option than gambling as to whether price is going to go up to here. Hi there, John McLaughlin, just back at the end of the session to give you a quick synopsis of what happened on the Crossfire Gold session. So remember we talked about the news coming up at 14.45 and the price moved upwards. I kind of thought it would go down to meet this moving average, but that's what happens sometimes with news, particularly on a Friday and when you're trading gold. So after the news kicked in, it almost reached the higher high just up here, as I put on the chart just a little bit earlier. The price then came down. It kind of went into consolidation. It kind of respected the 50 moving average, and then here we had news again at 1800, and then once that news kicked in, didn't really have a major impact because it's getting late on a Friday, and then the price eventually went down to this moving average, as I was banging on about on the session. So it did meet the moving average, but because it was Friday, because the markets are closing for the weekend, I thought, okay, I've done my 10 pips for the day. I stayed on for 2 hours, which I normally stay on for about an hour, and close it out, but I just thought there might be some more learning to be had in there. So eventually it came down and it met that moving average. So from where we were, let me see if I can make this a bit smaller. From where we were here, so so if we did, where could we possibly have got in? Well, let's say for argument's sake, we got into this this area here, and we'll go down. Okay, so it went down 50 pips. There was 28 pips the moving average. So had we waited a bit longer, then potentially we could have taken that trade, as I spoke about. But you know, we got 10 pips of the day, and that's our target. And what we'll do, we'll come back on Monday. It'll be interesting to see what happens on Monday, because usually the markets on a Monday can either go one or two ways. They'll either be really volatile because because it's over the weekend, waited over the weekend, the markets are back open, or sometimes the markets can be slow in waking up. But that'll be interesting. Anyway, I hope you enjoyed that session. We stayed on a bit longer than I normally would, but again, it just to really explain the consolidation phase here, and the moves up and the moves down, to try and get people out their stop losses. So the next time you see a move like this, you can be thinking, okay, we've got the news, let's just put the brakes on, let's not get into a trade and see what happens. And we missed this one because I was being cautious, but it doesn't matter at all. We've got our 10 pips for the day. Okay, anyway, I hope you enjoyed that. If you get some benefit from this, then obviously you're invited to subscribe to the channel, and I'll see you on the next session. All right, bye for now.